Thanks for joining us today, guys. Today we are joined by Chris Odegard in front of the lovely Hong Kong skyline, and excited for him to share a bit about his journey. A little bit different from some of the other guests we've had, and love that, and excited for him to share his perspective. So, Chris, without further ado, you mind introducing yourself?
Absolutely. My name is Chris Odegard, and I am the prolific investor at theprolificinvestor.net. And I was a conventional investor for many decades. I was a corporate guy. If anybody read Robert Kiyosaki's cash flow quadrant, I was an E. I was raised by E's. I grew up in E, and I didn't know anything about being an entrepreneur, starting a business, being an investor, other than being on what I call the 401k highway to mediocrity. That's all I knew about investing. I'm gonna trademark that term, by the way, because I use it all the time. And that went about as well as it goes for anybody. It is a mediocre path, and then in my mid 40s, something happened. The end of my 19-year marriage and loss of 55% of my assets and thousands of dollars a month in cash flow, and all of a sudden here I was, and the mediocre path was looking, way worse than it was before. And so what are you going to do from there? And it could be a divorce. Everybody experience not everybody, lots of people experience this: divorce, bankruptcy, a health issue that just, whatever, loss of a job. And then what do you do? And coincidentally, around that time, a friend of mine said, "Hey, Chris, I read this book. You should read this book." And so I dutifully bought the book, and it sat off to the side for way longer than I cared to admit. And it was Robert Kiyosaki's Rich Dad, Poor Dad. And I read that book, and the light bulb went off, and I went, wow, there's a whole other world of investing outside of, the publicly traded markets. And so I started, moving in that direction pretty quickly. Right around that same time, after I read the book, I was sitting in what I fondly refer to as my van down by the river post divorce condo. If you ever saw the Saturday Night Live skit with Chris Farley, which you have, I could tell by your reaction, the van down by the river, I was living in that place. And an ad came on the radio, and Robert Kiyosaki's training organization was having a free seminar, about 30 miles north of me. And so I was like, I got to go to this. And I signed up, and the day that I was supposed to go, my 92 F-150, which is still here out of the driveway, didn't start. And I could change the starter, but I can't change it that quick. And so, I managed to find a rental car company that would drop a car off to me, and I went. And if you've ever been to seminars and training, the free thing turned into the paid thing. And, and pretty soon I had put $15,000 on my credit card for my son and I to take a whole series of training classes on real estate. And that was probably some of the best $15,000 I ever spent at a time when I couldn't afford it. And so we learned about wholesaling and creative financing and flipping and rehabs and you name it. And so that just began a journey. And to kind of shorten it up a little bit, 9 years after losing 55%, I thought, man, this was a great ride. I want to start a blog and tell people about what I learned. And I thought, what credibility do I have? 9 years later, I was a sophisticated investor. I had a bookkeeper. I had financial reports. I knew exactly what my net worth was. And I was like, wow, too bad I didn't have those numbers from 9 years earlier. But there's an interesting thing that happens when you get divorces, that the lawyers make you take an accounting. And I found that, right? And 9 years later, I had made up everything I had lost and multiplied it many times over. And I quit my corporate job, and I never have to work again if I don't want to. And I said, okay, well, maybe I have a little bit of something to tell people, because, retiring, or I call it fire. I love firing the man at 56 isn't, the greatest thing in history, but when, 9 years earlier, you lost 55% of everything, I thought, okay, well, maybe I have a little bit of credibility here. So that's a long way of telling the life story there.
When did, so it sounds like obviously big event that happened with the divorce that kind of shifted the mentality.
Yep.
How did you eventually read the book, went to the training classes. how did you go from or determine that you wanted to shift assets, right, or pull out a 401k? I don't know how you went about that,
Yeah.
right, to start this real estate journey.
Well, there was a couple things that happened. So I had to, I think my son was, maybe 15 at the time, and my daughter was just finishing her first year in college. And she's like, okay, Dad, I want to move off campus. And I knew this was going to happen before she ever went. And my thinking, years before was, I'll be damned if I'm going to pay somebody else's mortgage up there for the next 3 years. So she said, hey, I want to move off campus. I said, okay. And it was the time of President Obama's first time homebuyer tax credit. And I said, okay, so we bought a duplex, and the we part of it just meant that she and I were both on the deed together. And I actually didn't have the money for the down payment. So I called my dad and I said, hey, how would you like to be part owner of this duplex with me? So he put up some of the money and I did. And then, it was 2 units on one side, 2 units on the other, 2 bedrooms. And so she lived in one side and rented out a room, and then we rented out the whole other side. She was about 100 miles away, and she did some of the property management up there. And that was the first, real estate investment. And then eventually eventually I had a post-divorce condo, which turned into a rental. And then there was some, it just kind of went on from there. You did mention the 401k. So I like to say that I have this ability of when, sometimes somebody presents an idea to you and you say, well, that's too good to be true. And everybody just runs away. But when somebody gives me an idea that sounds too good to be true, I start moving forward carefully. I don't run away. And I was involved in a kind of a mastermind or real estate group. And like a lot of people in the corporate world, I had a lot of money tied up. Well, I had a lot of money before I lost the 55%. And then I had some money, but anyway, it was still, a significant amount of money, but it was in a 401k with my employer. And a guy said to me, hey, Chris, ask your company if you can do an in-service transfer. And I said, well, what's an in-service transfer? And they said, well, that's where the company will let you take some of that money and move it out, before you're retired and while you're still working for the company. At this time, I had been working for the company for decades. And I was kind of like, yeah, right. If that were possible, certainly I would have heard of this before, right? And so it just kind of blew by, and I didn't think about it. And then one day I was at work and I did think about it, and I looked it up and I checked, and the company would let me take all of their matching contributions over the years and move it out. And I did. And so there was a chunk of money that I used to get starting in some other real estate investments. Now, this is a company by company thing. You just don't know, but it's a question you need to ask. Can I do an in-service transfer? And so lo and behold, all of a sudden I had this chunk of money to help jump me out of the stock market into alternative investments. So that was awesome.
How did you, what was your strategic framework as you were starting to make decisions, right, around, do you upgrade from the van to the condo, right, versus buying a duplex versus, another real estate investment or some other alternative, right, which likely came to you at some point in the journey, right? How do you determine where to allocate, the money, given the opportunities?
I wish you said how it's a strategic. I wish I could say it was all that clean and nice. It was 2 steps forward, 3 steps back, 1 to the left and 1 to the right. So I started off, I really got enamored with notes, performing and non-performing notes. And, in theory, you had all the benefits of real estate without the tenants and toilets and all that kind of stuff. But and I know there are a lot of people that love notes and are very successful. It was a nightmare for me. It was way more work than any of the, the single family rentals or small multifamilies. It was just awful. And then the same company that I was buying notes from and got my training from, they started a note fund. And there was this a webinar, and the guy was like, look, the same money that you're spending, that you're putting in notes, you could earn almost the same amount of money without any of the work. And that really appealed to me. And so I did that. and one of the problems with the notes is there's no tax benefits in that, right? But that was kind of unbeknownst to me at the time, my introduction to syndication. And so and in this in this world, you have to kind of surround yourself around people and podcasts. It's an education process. You have to learn. And so little did I know that was kind of my first syndication. And then and now my favorite thing today is apartment syndications. And I just love being a limited partner. I put my money in, and 3 or 4 years it comes back with twice as many friends. And once I've wired off the money, I don't really have to do anything. And so it was single families and small multifamilies, and it was notes, and then it was a note fund. And then I was like, wow, there's a better way here, because I'm all about making the most amount of money with the least amount of my time. So that's the strategic thing, but it wasn't a very smooth pass. It was a trial and error kind of a thing.
So you mentioned the time component, right? And obviously your story elicits a bit of that in terms of managing yourself versus, giving up some of the return to have someone manage it for you. How did that drive your decision making? It sounds like you were parallel pathing for 9 years, where you were investing in real estate, still had the full-time job, and at some point you jumped over, right? Talk to me a little bit about that, the importance of time and how that has framed kind of what you've gone after from an investment perspective.
Well, yeah, I was still had a full-time job, and, and I was, for a while there, I was just burning the candle at both ends, working my 9 to 5 job. And then I would come home and work my 5 to 9 job. And I actually ended up in an emergency room with some pretty serious, almost life-threatening health issues, just because I wasn't taking care of myself. I wasn't sleeping, my nutrition, my physical fitness, it just all wasn't working. And I just, the question is, how do you do this? And so just kind of along the way, like I said, through the education process, I stumbled across, and I wrote an article about this, about the 3 ways to invest in real estate. So I think this is kind of related. There's the do-it-yourself method, go out and be the jack of all trades, single family, marital, whatever. And then there's the turnkey method, where you go find what's called a turnkey provider. That's a company that works in a particular cash flowing market in the United States, and they will go find great 3-2 rentals and do durable upgrades. They will put a tenant in place, and then you come along and have property management. You come along with your bank loan, or you cash, or you buy it. And then the third way is the syndication, where you just come alongside a great operator and put in your money. And what's interesting, and I've actually put this on my website, the money that's involved, the risk that's involved, and the time that's involved. And with the syndication, you get the highest returns for the same amount of money in, and the least amount of your time. And I found that, out the hard way over time. And I just don't, I don't know. I have this aversion to trading time for money anymore. I did that for way too many years, and I don't ever want to do that again,
So if you've got someone who's interested in learning more about real estate and kind of going down the path, right? Obviously you read Rich Dad, Poor Dad, that kind of spurred you in the right direction. Right. What place would you say is a good place to start, or resource, or it can be mind-numbing at times, right? Debilitating to take action, right?
Right. So
how do we get them moving forward?
Yeah. So it's going to sound very self-serving, but I wrote a book called "Get Off Your Ass and Manage Your Money: Why You Need Alternative Investments." So after I had gone through this 9-year journey, I thought, well, my journey was very inefficient. I know enough to tell somebody what would be a straighter line with less mistakes and less jogs to the left and the right. So that's one place to start. But if people go to my website, theprolificinvestor.net, I list a whole bunch of books and a whole bunch of podcasts and some of the places where I have done investing. But it's not like being a conventional investor where you put your money in a Vanguard target retirement fund. It's harder. You have to get smarter, and the things that are available to you are so numerous. So I can't, nobody can say, go do it this way. You have to find the alternative asset that matches your risk tolerance and your personality and your skill set, and how much money you want to make and how much time you want to devote. And so you really have to, it's an education thing. And unfortunately, it just takes a little bit more time, but the benefits are so much better, right? So much better.
What were some of the biggest benefits to you, right? You obviously talked about time, right? So moving out of the job and kind of moving into, I don't know, your own company or as an investor. What were some of the other big benefits in your mind to getting off the 401k highway and into
to mediocrity? Well, yeah, I mean, it's sometimes people like me get a bad name, like work's the bad thing, right? Well, I like to say you want to get to a place where work is a choice instead of a necessity. Most people are working regardless of whether they like that job because they have to. The place you want to get to is where work is a choice instead of a necessity. So if I get a ton of enjoyment by being a greeter at Walmart or helping people at Home Depot find what they need, and it pays $20 an hour, and I want to do that, and that's great, but I've got other income that I'm not doing it for the money, I'm doing it because I like it. So I think that's where people, want to get to. Sorry, now I've lost track of the question, so.
Yeah, in terms of where they want to head, right? Outside of work, right?
Yeah.
Work not necessarily being a bad thing, but focusing, right?
If you love what you're doing, it's not work, right? But unfortunately, I know I've been there. Most people are not in that situation. They're working because they have to in jobs that they don't like most of the time.
So of the things that you are looking at, right? And your website lists a ton of different options and alternatives.
Mm-hmm.
What's the most exciting thing for you today that gets your juices moving? Like, hey, I'm excited to learn more, find an investment that's in this space or this strategy.
Yeah, unfortunately, there's a guy that I know, and he coined this phrase called the power of boring. So, I love apartment syndications, and the particular apartment syndicator I use has a track record of delivering on average 30% average annual returns to the limited partners. And I'm like, you mean I can wire my money off and not do anything, and on average I'm gonna come out at 30% a year returns? And that is, and we call it's really boring because we just send off our money and it comes back. But I think a lot of people would be really excited. I mean, in the history of the S&P 500 since its inception, the average annual return of the index is just a little bit shy of 10%, and there's no tax benefits in there, right? So I'm getting 30% average annual return. I get depreciation, which means I don't pay taxes on most of that income. So if you're trying to get to a particular place, I'm just getting there so much faster than everybody else. So that's kind of exciting and boring all at the same time.
It's the exciting, boring consistency, right? That you look for.
Yeah. And it's tough in the alternative space because people syndicate car washes, ATM machines. You can do notes, there's different debt plays, and there's just so many things out there that you really have to narrow your focus and say, have an investment criterion. It's like, what am I wanting to get from my investments? I want a certain amount of return. Is it an appreciating asset? Does it has built-in tax advantages? Can you use leverage? And if you have a list of things that you want, from your investments, it makes it much easier to just say no to a whole bunch of things because there are so many things out there.
Who's the partner that you use that you would recommend?
On the apartment syndications?
Yep.
Yeah, I use Western Wealth Capital, and they're actually out of Vancouver, Canada. And they are just, it's interesting. In this particular situation, the asset really doesn't matter. They do apartment buildings, and you could have two identical apartment buildings on either side of the same street, and one syndicator would take that things to great heights, and the other one would be a complete failure. So you're really looking for, I'm investing in the team, the people who are experts in this asset class. Right. They look at them, they buy them, they improve them, they sell them, and it's, anything that they put in front of me, I will invest in,
Hmm.
hands down.
I take it.
And the nice thing, sorry to interrupt, but the nice thing about the private space is the public space. I know the CEO. I can call her up. The two co-founders, I've met them. I've had drinks with them. I've spent time with them. I could call them up. You don't get to do that when you're investing in Coca-Cola,
Yeah, a little different, right? You get escorted off the property.
Yeah, exactly. This guy is crazy. He thinks he can talk to me, right?
That's funny. What's the best way for the audience to be able to connect with you, Chris?
Yeah, if you go to theprolificinvestor.net, everything about me is there. And probably the most interesting thing is that if you want to have a free 30-minute virtual coffee with me, I do those on Thursdays. You can click on the little coffee cup and get on my schedule, and love to talk with people about investing in this space and help them out any way I can.
Awesome. Appreciate your time today, Chris.
Oh, thanks for having me on. I really appreciate it.